I'll never trust a cool inflation number again after this. Seriously, every time a headline screams inflation is cooling, I get a little more skeptical. It's like deja vu. One month we're celebrating, the next we're bracing for impact. Let's break down why CPI's drop might be more smoke than fire, because when you peel back the layers, the story isn't as rosy as Wall Street wants you to believe. There's a lot more going on beneath the surface, and it's time we dig in. You ready to see behind the numbers? Let's pull back the curtain and see what's really driving these so-called cool inflation stats. Alright, first up, the fake-out cooldown. This is where the numbers look good at first glance, but the reality is a lot more complicated. May's CPI ticked up just 0.1%. Wall Street threw a party like inflation was dead. You'd think we just won the economic Super Bowl with all the confetti and high fives. But let's not get carried away. But zoom out, year over year, we're still up 2.4%. That's not what the Fed wants to see, no matter how much confetti you toss. The Fed's target is 2%, and we're still above that line. So while the monthly number looks chill, the bigger picture is still hot. And let's not forget, these numbers are averages. Your personal inflation rate could be way higher, depending on what you buy and where you live. Now let's talk about the sneaky villain, core CPI. That's inflation minus food and energy. It's supposed to give us a cleaner look at price trends, but sometimes it hides more than it reveals. It rose 2.8% year over year. Translation? Your house isn't burning down, just your living room. Everyday essentials, rent, insurance, medical care are still climbing. So while gas and groceries might dip, the stuff you can't avoid keeps getting pricier. And here's the kicker, that 2.8% is the highest core CPI we've seen in decades. It's not just a blip, it's a warning sign flashing bright red. And get this, core CPI just hit its highest level ever since 1957. That's over 6 decades of data and we're at the top. Headline CPI, highest since 1913, that's more than a century ago. We're talking about numbers that echo through history. We're basically living in an all-time expensive world. Every trip to the store or the pump is a reminder that prices are still sky high no matter what the headlines say. Meanwhile, markets are hyped. 10-year yields fell to 4.44%, common stocks are up like it's Christmas in June. Investors are acting like the Fed's about to cut rates tomorrow. But is that optimism, or Wall Street just ignoring the Fed's homework assignment? Because the Fed's job isn't done, and the market might be getting ahead of itself. There's a real risk here that everyone's celebrating too soon, and the next inflation report could bring the party to a screeching halt. Here's the kicker, the BLS, the folks who crunch these numbers, are underfunded and running on fumes. Their resources are stretched thin, and that means the data might not be as bulletproof as we'd like. So how reliable is this data anyway? If the people tracking inflation are struggling, how much can we trust the numbers we see? It's like putting fancy frosting on a cake that's already overbaked. The numbers look sweet, but the reality underneath is tough to swallow. Bottom line, today's cool CPI, it's just window dressing on a record-high cake. Don't let the headlines fool you into thinking inflation is gone. Inflation isn't gone. It's just hiding in plain sight. The real story is in the details, and you have to look closer to see it. And the Fed? Still watching like a hawk. They're not fooled by the headlines, and neither should you be. So what do you think? Are you buying the cool inflation story, or do you see the warning signs too? If this CPIT gave you alpha, drop a comment. Fed watch mode on. Let's keep the conversation going and stay sharp together. And follow Stock Snaps, so you're never trading blind. Stay tuned, stay smart, and don't let the numbers fool you.